Hello and welcome back. This is Colin Keeley here.
And I'm Brent Sanders.
And we are two guys buying and building wonderful internet companies.
Yes, wonderful.
Wonderful. That's a Warren Buffett word. That's what I'm stealing.
Oh, good.
I thought it was a pleasant term.
That's good. I like that. So this week, or I should say the last couple of weeks, we've had some interest in people getting involved from a capital perspective and saying, let me know when you have another deal. Let me know when you have another business that you guys want to tackle, or I'd love to get involved. And kicked off an interesting conversation with Colin and myself, really Colin taking the lead on ways to make it work, because of the people we've spoken to immediately, and we both worked at a venture capital fund, and immediately my mind goes, oh, maybe there's interest and everyone's starting a fund. Everyone has their own funds and is raising money, and those structures make sense. But what we're doing isn't venture capital. We're buying the business. And so, Colin, you've done some research around this, and I think that would probably be the best thing to talk about this week, is just what your research was, what you've looked into, what's out there, what are the different ways of working with money. We can only fund so many of these things, and our resources are fairly limited to that extent. So it's like, how do you look at this with taking money from third parties?
Yeah. So coming from the venture world, like, we're well-versed in that, and the venture world is just so well established, and people do safes, simple agreements for future equity, or pretty standardized venture rounds. And I understand that and portfolio construction really well. Private equity is the Wild West relative to venture. There's just so many different ways you could structure things. Venture's always been like a cottage industry relative to private equity. It's like a small corner. So, stumbling into this private equity world, it's probably most similar to search funds. So search funds came out of Stanford maybe 30 years ago. So MBAs basically raise a pool of capital and go out and buy a business. And it's normally like a box making business in Idaho. It's not as commonly these tech companies. So just looking at how we would structure this, I think you could go deal by deal, which is often called like fundless sponsor or syndicate. So real estate private equity, which this is more comparable to than venture, is you can syndicate deals out where you buy companies and basically you commit on a letter of intent, and then you go out to your email newsletter of high net worth individuals and raise the capital after you commit to a deal. So that's an option. Or you raise a proper fund. So you raise this big pool of capital and you go out and deploy it, which the bar is much higher to actually do that. Often you need some history to point to and make people convinced that they should be comfortable giving you their money. And so in venture, people are raising these rolling funds and all this different stuff. It seems easier to raise these tiny venture capital funds than it is to raise a tiny private equity fund, at least from what I could tell in the market. So we're looking more at going this syndication route initially.
Yeah. And by the way, I just have to say this, it's like we're thinking of this stuff as more thought experiments in the future. And obviously the main focus is executing on Blink Sale, making that a success. And then I feel like everything will be so much easier to fall into place, to be able to point to some track record and point to, hey, there's a playbook that exists. We know how to run it. We have the resources to run it. But the idea of having additional resources, let's just call it additional cash, to be able to run that playbook is super interesting and compelling. However, yeah, we're not taking our eyes off the prize right now. But that being said, I think it's worthy of exploration.
Yeah, I think the natural end of delegation is just being an investor and just buying companies, putting the right CEO in place and letting them make all the smaller decisions. And so search funds build up all of this infrastructure for sourcing and deal structure and everything. And it always seemed like a waste to me, where you do all this stuff, you buy one company, and then you sunset it all. So this is more, it's a little bit of hubris to be like, I am the best person to run this company. So I'd much rather pair a CEO who would actually be better equipped to run the company. And I think we could find them. And we have some experience doing that kind of thing in the studio model.
Yeah, that truly was a difficult challenge. So with the studio model, you would come up with an idea and you'd pair them with a person. And it was all about having a really strong Rolodex and combining all the different communities together to find the right person to run a specific type of business. Because it's not only the person, but it's, are they in the right point in their life? Are they, as experienced? And then we've even talked about there's different sort of grades to these operators of and different comp setups based on those grades, of, okay, this person has a track record. You're pretty confident that they're going to be able to turn something around and keep it running. And they may even have their own playbook. That it's all very much more art than science in my mind, because it's dealing with people. But I do think that's something that the question is, are we the right people for that? And are we in a particular position? And I do think with these tech companies, these like SaaS companies, SaaS businesses in particular, there is something to be said for it, our experience. And then again, we've got to show that track record via Blink Sale and say, hey, we started here and ended here. I think that's going to be critical, even though we do have people that are saying, hey, let me know when you have another deal. I'd love to participate. They're interested in my mind, until you get into the, okay, give me the check. We've come up with a structure. We're happy with it. We'd like to do this. Then it gets a little bit interesting, because right, there's always this, everybody wants to be a part of it as long as it's winning. And then once they realize like, oh, I have to hand this money over, or there's a capital call or a commitment to be made, then it gets serious. And it's okay, wait, like, what else have you done in this space? And how do I know you're going to be able to deliver returns?
Yes, I've talked to a few of my search fund friends that have actually bought businesses this way, and they get their cap table already before they find a business. And roughly a third of folks bail once you actually find a business and don't come through with the money. And then you ask either your existing 2/3 of folks to increase their commitment to fill in the gap, or you have to go find some other folks to fill in the gap. Just one note on this, finding these operators. So with startup studios, you're taking a company from 0 to 1. And so that burden on that CEO is just extraordinarily high. And you have to find someone that can tell the story so well that they can convince future investors to invest, like employees to join this company that is basically non-existent. And so you're like bringing something into life. And then with the holding company or private equity, you're basically hiring someone they just have to scale something that already works. And there's a pretty like well-established playbook on how you would scale like these smaller SaaS companies. So I just feel like the burden is so much lower. The goal would be like, just find someone from a company that's similar, that's 2 to 3 times the size, and be like, hey, I love what you did over there. I'll come over here. You want to be the CEO, and we'll incentivize you very well to do a good job to do that.
Yeah, 100%. That was the key indicator, was can they sell? As in, can they sell people on joining the team? Can they sell? Can they raise money? That was not all that mattered, but that was most of what mattered in the studio model when we were working on it. Which was scary, because then you knew that these people they had plenty of other deficiencies, but it is really hard when there isn't a track record there. And the most important thing that they could do is get smarter people to join. And so if they were good at that, then that's, perfect for that stage. I would not want to go back there. And it's much harder to find those people. It was difficult because to a certain extent, we only really had success with people that had done it before, had done it before on their own, done it before with less funding or whatever. It was pretty difficult.
Yeah, it's really hard. And it shows every rich guy that has like a nice exit wants to do it again, but not actually be the operator. So he starts a startup studio. And then there's always a more interesting golden goose. You have 5 ideas, one gets more appealing, the other 5 get neglected. So I think that the companies that do it really well, the teams are dedicated to what they're doing and they live or die based on that. And so you can't really spread people across as much because they just don't care about any idea that lags at all, I would say generally. But that's a different discussion, is like, how do you properly structure a startup studio?
You don't. That's how you do it. Going back to this space, this is one of the things that I like about it, though, is like, as we're working on Blink Sale, it's like there's income coming in, there's product market fit, you have customers. It's so much easier. It's like at the earliest stages, which I've spent so much of my career, it's been fun because it's like when you do start getting the customers and it does start to click, it feels so good. But so many of them struggle to even get that point and then sustain that point and grow that point. So it's nice having a little bit of wind in your sails, so to speak.
Yeah. And so thinking through what this looks like. So getting the basics in place is the most important step that I've been working on this week, of collecting investor interest, deciding on a focus, landing page for the sellers, just so everyone knows what you're actually focused on purchasing, having a debt partner in place, and then finalizing a structure. So all this is in the mind, like with the mind of when a good deal comes across, like we're ready to hit it out the park and move quickly on it.
So when you say a debt partner, you mean a bank?
Yeah. Yeah. So there are banks. I got a few referrals of ones that specialize in like search funds or these kind of type deals.
And what are they like? How does that typically work? So you have a business and they already basically understand what your financials are. So if you do need to raise debt, they already know the deal and you already have kind of terms figured out, or do they want to look at what are those terms even? I know we talked about this before, but now that I think about it, it's like, it's got to be a pretty special banking. What are they getting out of it and why they would want to get involved with these businesses? But as I'm even asking that question, obviously there's capital involved, so there's a reason for them. But I'm curious, are these special banks or is it like Chase? Like they just have a branch that's interested in this type of lending?
No, yeah, it's not Chase. It's much more specialized. There's a lot of boutique banks that do this kind of thing, and they do it for search funds traditionally. And some of these deals are like 50-50, so 50% debt, 50% equity. And there's sometimes like a seller note in there, so maybe you can knock your equity down below 50% as well. And then, so the debt goes to the business. So like we're not personally taking on the debt for these kind of structures. That would be more like an SBA 7A loan where you're personally guaranteeing a debt. At least that's my understanding right now, looking into it more. But yeah, they do this for all kinds of search funds, and they would just love this like SaaS, super stable recurring revenue, like niche B2B is like the most stable you could be. So yeah. I think they'd be the most comfortable lending money on this type of business.
Yeah, it's great. Again, the resources that are opened up in opposed to a venture where it's okay, you fill up the tank and you have to then, as soon as you fundraise, you're already thinking about the next fundraise. It's just a much different focus of the founder. One thing that I'm thinking about is like the folks that have approached me or I've had a conversation around capital, they've expressed interest, not so much in a fund. So I guess this fits pretty well. They want to, look at deal by deal and they seem like they want, I don't know that they want a job, but they want to have some level of, it's not a board seat per se, but, and it's nebulous. Like I haven't really heard a consistent drumbeat around it, but in these types of deals, is there a common like LP position where they have some power, or is it really just, you're just an LP and that's it? Or is there something more akin to like a board seat when you're, leading around?
So by definition, an LP does not have power, a limited partner. So the general partner, GP, makes the decisions. But yeah, I think it's common to have these people like circling around these companies that have made large investments. And if they want to jump in and be helpful, I think that is pretty common. But they're not the ones making the decisions.
Right. They're not directors. They're not board members.
Right. I mean, they could always lean on you. We're not happy with what you're doing. There's a lot of soft power for sure.
Yes, that's a good way of putting it. Yeah, it's interesting. I think it is a chicken and the egg type thing, or cart before the horse type thing, where it's like if we see a deal pop up, like the reason I feel like we had success with closing Blink sale was just we were ready to move, and there was no pause or decision around on our end. We just knew, hey, this makes sense. This is what we know we can turn it around, or we know we can make improvements. And the capital wasn't like, oh, I've got to call on so-and-so. So you do have to have the fund raised or the pieces in place and committed to before you can do any sort of deal.
Yeah, for sure. And doing this one smaller deal with Blink sale, like we hit most of the points. So we have one deal under our belt. We know how it all works. We know how to do diligence and how to negotiate everything. So we're like well ahead of the game. A lot of people are doing this for the first time on their first deal. So I feel good about it. And so the last couple things are figuring out a name, which is not easy, and then sourcing deals. So like getting that infrastructure in place next.
If you're going to start a fund, though, it has to be some name with rock in it, or are you allowed to choose names without rock in it?
So our positioning is going to be like for founders by founders. So I almost lean towards a silly name, like Shrug Capital is like a consumer venture capital fund that's doing really well. Something along that where it's like borderline silly and playful.
Yeah. So FUBU, basically the FUBU of funds, for us by us.
Oh yeah, I didn't even think of that.
Yeah, I was thinking some color in a rock, some like red rock, gray rock. Those are probably all taken though.
Everything's taken. So it's hard naming a startup, and like capital, there's every variation of capital ever, or equity. It's not easy. But if you venture into these sillier names, not a lot of people are naming their things Rainbow Capital or something like that.
Yeah. They're not trying to attract the interesting money.
Yeah. But that's our opportunity. We're not the suits. We're not coming from investment banking. I do have an MBA, but I don't look like it.
We don't hold it against you. Exactly. Yeah, I think the name is really important to indicate, and I think this is an asset. I'm hoping that we can continue to carry on as we're going to be easy to work with. We're going to be good stewards of the business, and if you've built something and you're looking for an exit, it's not somebody who's going to come in and I don't even know what like the general conception of private equity is, other than they're going to be assholes or something like that. So maybe we should just call it no asshole capital. But
I did write that.
Yeah.
As no assholes is one of my pillars on this Webflow site I'm working on.
Excellent. Yeah. So something along those lines, but I think people will get it, and yeah, we'll see. It all makes sense to dive into. I'm glad you're looking into it. I'm glad you're doing this research in a little bit more, obviously more depth than I am, but because I think by the time we decide, oh, this is going well, and now you need to raise money, you're like 6 months away from, and I'm guessing that's what it takes to actually fundraise and move this stuff forward. Even with people that want to give you money, like the all the fundraising processes I've been around, they take longer than you think.
Yeah, it'll be interesting. I don't think it'll take that long. The thing I was missing is you don't really need that much equity raised with debt and with a seller side note. So the companies you could buy with not a lot of equity is pretty impressive. I guess that is the beauty of private equity. Oh, one other thing I didn't talk about is like experimenting with not just pure private equity, buy something, sell it in 3 years. I would love to be like a long-term steward of these businesses. So people have nice structures for like permanent equity or like holdcos where the money's tied up for a couple years, and then you offer people exits. Like you could buy them out or pay them out with dividends. I think the beauty with these businesses is they just cash flow so well. You could buy them for such low multiples. It makes sense to hold them for the long term. I do think that's more appealing to sellers. Like you are protecting their legacy indefinitely and are going to grow it. And, yeah, you could do that as well.
That's what I mean. That's the way you look at these. That's the way I look at all of these, monthly subscription or as a software or businesses where you're basically on the hook for paying as you go or something along those lines. It's not. Yeah, it can be looked at it exactly like that, as an annuity, which is what's better. It's like life insurance policies. Now you're in the same category as some mutual. So anyways, I think that is a very compelling model. And I think it also fits, our philosophy, which is farmers over miners. This idea of we're not coming into to essentially rape the land and strip it and turn it into whatever else, but it's more, we're looking to plant new seeds and grow it.
Yeah, I feel good about it. I think you'll develop best practices like across the holdco, and there's no reason why you shouldn't be able to grow it better than single bootstrapper did, which I think is the most appealing person to buy from, is like some bootstrapper that really cared about the business, cared about the culture, and then you just are taking it to the next level with your best practices and processes in place.
Yeah, I dig it. Cool. Yeah, so we'll see where this ends up going. I think again, eyes on the prize, trying to make Blinkzilla a success story. That's number one. But having this sort of waiting in the wings, I shouldn't say waiting in the wings, but something like that where we're not, this isn't the main focus, but he can't think about it and then not at least see if you can generate a little bit of interest. So I do think it makes sense to spend some time on now to get it up, conceived, and not necessarily up and running, raise money yet, but get things ready. So if you do see an opportunity like next week or next month, you can capitalize on it.
Exactly. Getting ready to capitalize.
Well said.
So that's it on my end. Anything else you want to talk about?
No, this has been super interesting. This definitely deserves its own conversation. I think if you're out there listening, definitely let us know if you did, and hit us up on Twitter. I feel like this is a good conversation to continue, because you see a lot of people, especially in the Twitter world, I don't even know what to call the people with funds and rolling funds and there's a category of Twitter that somebody probably has a list for, but I do think it's worthwhile of continuing the conversation and seeing what other people are doing. I don't know, there's got to be other people in our kind of similar skill sets that are in either beyond this stage, maybe they have feedback, or behind us and find this useful. So either way, let us know.
For sure. Yeah. Any feedback is much appreciated. We've received some feedback that this micro P stuff is super interesting. So I think we'll focus on this more and more. But yeah, hit us up on Twitter. I think we're both on it all the time. So take care, everyone.
Right. Bye-bye.